Hey, everybody. Today on the AgentXcel podcast, we have our guest, Chris Lesmeister. What's up, Chris?
How you doing, my man?
Good, good. Hey, thanks for jumping on the podcast. So when I started the show, I said that I was doing this for the realtor, and that's what it is. And I like to always help the realtor get to the next step. And that's, a lot of things that I talk about are getting them to invest more in real estate and, parking some of their profits in investment homes. And I met you, interestingly enough, probably about a year and a half ago or so. And I was in a mastermind. I just kind of want to let the audience know how I know you and why I have you on today, since you are not a realtor. I was in a mastermind and they were talking about cost segregation. And what's so interesting is you realize, you learn as much as you can learn, and then you go produce. And I had been going to masterminds, learning how to sell a lot of houses. And then I started listening to podcasts on how to invest and buy rental properties. And I started doing that. And then it was the one mastermind I went to where they started talking about, for investors, and they were talking about cost segregating. And I was like, what is that? I'd almost never even heard, Chris, never even heard the word. And I've been doing real estate for 17 years. I've been investing for about 5 or 6. So it just shows you that, one, you got to keep getting in rooms and masterminding with smarter people than you, because you own 15, 20, 50 homes doesn't mean you know everything. So that was the day where I realized, man, you got to keep going into rooms with people that are, much smarter and learning new stuff. Cause I feel like the interesting thing is I may have heard that so many times in masterminds before, but I wasn't there yet. So it was I probably entered into that mastermind now having a lot of rental properties and then heard the word save on taxes. And maybe that's what sparked my interest that day to actually listen.
Sure.
And so here we are. So met you in that mastermind. I left. I thought, I'm going to give this guy a call. I gave you a call, and I remember, we got it scheduled, and we did this thing called cost segregating. And so I just wanted to let the listeners know what the backstory is of how I met you and what the title of what you do is cost segregating. And now I'm going to have you take over and explain, you and what cost segregating is, how it's done, who it's for, and things like that. So how long have you been doing this? What's your company name? And let's have you take over from here.
Sounds good. Chris Lesmeister, the company is called Cost Segregation Services Incorporated, or CSSI for short.
Okay.
The reason you probably didn't understand or really know what it was is because your tax professional hadn't yet told you about it. And when people are looking at money after they're investing, what do I do with it? How do I handle it? They turn to their tax professional, whether it's a tax attorney, CPA, good financial person, whatever it is. So cost segregation by IRS definition is an engineered-based study, not an accounting-based study. And that's why accountants, all tax professionals typically don't get involved with it, because it's something they can't offer. Long story short, what this thing does and why it piqued your interest, it will help you create tax benefits that will reduce your tax liability. And that seems to be the phrase that everybody catches on to. Wait a minute, did you just say I get to pay less for taxes? Yes, it's an IRS code that just to say you can keep depreciating your property, your commercial property or residential property, call it an investment property, whatever it may be, over X amount of years. Or if you want to, you can speed it up, and you get a company that can do a cost segregation study on the property. They're going to identify all the components inside and give you an estimate on what the tax benefit that you have access to is available. And you can then take that tax benefit and apply it to taxes you owe. So here's a good rule of thumb for everybody. For every $250,000 in property purchased, I don't care if it's a residential rental, if it's an office building, for every $250,000 in property purchased, there's roughly $15,000 to $17,000 in tax benefit. So you buy a building for 250 grand on the head, you're looking at 15 to 17 grand, and you can take that off of the taxes that you owe. So if you owe $30,000 for the year, you won't have to pay 15 to 17,000 of it. And it just gets crazy. It does not have to be on new buildings. So for those of you out there that have heard the term cost segregation, like Chris said he had, You heard the term, don't exactly know what it is, but you know what? Just remember this. Doctors keep going for continuing education because they don't know everything.
Right.
Why do you think a law firm is called a practice?
Right.
You just
Yeah.
keep doing it and going back to school and learning things. And in all fairness to every tax professional out there, there's 79,000 pages of tax code. How could they possibly know it all? Nobody knows it all. Like Chris said, keep going to the things like mastermind meetings because you never know either A, when you're going to hear something for the first time that's going to catch your attention, or it's been the fourth time you heard it. But as my ex-manager used to say, the student is always ready, or the master always appears when the student is ready. When something directly affects you, then it sticks.
Yeah,
Right?
and Chris, that's what's the interesting part is, when I, invite agents to masterminds, it's very rarely that I can actually put like a really specific monetary value on them. I can always say like, hey, I'm closing this many homes and I think it's because of that. But when I
Sure.
left that mastermind, like I legitimately had no idea what this was, went to this mastermind, met you, called you, had you do these. Do you remember flying out to Oklahoma to do some of my properties?
Yes, sir.
Yeah. So I remember meeting you in the parking lot in Oklahoma, and we drove around to, I think, like 13 or 14 properties in Oklahoma. You were able to do the Phoenix ones without me, but I remember flying up there and getting you into my properties really quickly so that you could do these. And then it was probably about, a few months later, like all the reports done. And I mean, it was several $100,000 and tax, and I just want people to know, like, yeah, taxing, like I mean, we're not talking just very little money. It's something where it was like, it was something where I was it was almost to the point where I went both ways. Like I went the way you did. And I was like, wait, maybe I wasn't ready for this. Maybe I just wasn't at that level and didn't know about it. And someone was telling me and I wasn't listening.
Sure.
And then I also went the direction of, I was kind of frustrated at my CPA,
Right.
because I'm sitting there and I'm like, I knew what I knew the basic level of, depreciation on a house. But I didn't know it from this level. So why do you think that more CPAs aren't? I can understand you saying, hey, they don't do that. That's not their job. But I mean, wouldn't you think that falls in the line of like, referring that out to somebody and telling somebody who has multiple rental properties that they should be looking into the service?
Yeah, here's what 99% of everybody that we do this for has never heard of it. Now, Chris, I've got clients who've been buying buildings for 15 years, they're spending several $1 million per building. So imagine if those 15 residential properties that you had or whatever, imagine if that was 15 commercial properties are worth 5 million each. And they
Yeah.
could have been saving $350,000 in taxes on every building. So I say the same thing. Don't get too frustrated with your tax professional. I will tell you this, tax professional is great. The other place, they typically don't promote things they can't offer.
Yeah. Well,
Now,
you'd think they'd at least refer it out to someone. I mean, at
they
least,
don't,
but I
you know what
guess
it is?
everybody's
Here's the big
different.
thing. Here's the big deal. They don't understand it. For example, there's something out there called the 2014 Tangible Property Regulations. And I'm not trying to say this to bore your audience, but it's a massive change in the IRS code that happened in 2014, and it stipulates any renovations, any betterment, remodeling for the building. Everything up to that point, tax professionals would just capitalize everything. Well, as of 2014, you have to expense some things and you have to capitalize others. And every single tax professional that I've ever met, when I asked the question, how up to date are you on the 2014 tangible property regs? 100% of them said, I don't really know what that is. Now, that is massive because if anybody ever gets audited and they see the renovations and they weren't expensed versus capitalized, that's a problem. So right in that thing, you would think your tax pro would say, hey, there's this thing coming out, you should know about that. But again, in all fairness to them, I've met tax professionals who said, well, I've never told my clients about cost segregation because you have to do it on buildings that are purchased at $1 million or more. And I said, who told you that? And they go, I don't know. Is that right? Nope. It's $180,000 you can go down to. In a portfolio, the properties can be as low as 120 grand.
Okay.
I had a CPA tell me, well, yeah, I was gonna introduce a client of mine this, but then you have to pay all the money back in 2 years. I go, who told you that? And they go, is that not right? So what happens often If there's a question on the tax professional side about what is this thing, they're saying they're going to get you all this tax break. What I do is I set up a meeting, a quick 10-15 minute phone call with our vice president of operations at CSSI and your tax professional. And our guy can answer any possible question that your tax professional will have.
Okay.
And when that phone call is done, here's what always happens. When the phone call is done and we answer the question, we give them what they want to hear. Within a couple minutes, that tax professional reaches out to me separately and said, I didn't understand cost segregation was this. Can you help all my other clients?
Okay.
Absolutely. So 95% of our business comes through referral, and How I Met You kind of came through as a referral way, right?
Right.
It's getting the word out. So I just had lunch with a friend of mine today, and she goes, well, what exactly is your job? I go, I'm the rah-rah guy. I get people excited about knowing how much they don't have to pay the IRS. And everybody wants to really listen when you kind of funnel it down and get finite about what this does. I do want to say one thing, if you don't mind, about the visits.
Yeah.
Chris had mentioned that I met him out in Oklahoma for a bunch of properties he had. Part of the process when you go to move forward with a cost segregation study is we have a team of construction engineers back at the firm. They want to see what's going on inside the property, because if they can find other things that they weren't aware about, it just paints a better picture and brings up a higher tax benefit. So why don't CPAs, why don't tax attorneys offer this? Some can go out there and buy a program that does it. But when we compare what they were able to get for a tax benefit and what we were able to get for a tax benefit, we generally find 40% more money. I'd like to repeat that, 40. That's a lot of money. So yes, they can do it, but they don't know how to read blueprints. They don't have a team of construction engineers. They're not going to come out to the property and take pictures of the site inside and outside. So there's things that go along with having a cost segregation firm that can do it. And on top of it, not all totally understand what it is. So I think you started working with the tax attorney that I suggested you work with, because we came in and presented a tax attorney on what this was, and they weren't totally understandable about what it was. So once they understood, they go, oh, so now they refer me out to every one of their clients who needs a big tax break that owns commercial property.
Yeah, and that's what I want to recommend to people is, when you're talking to your CPA, if you're like totally in, if you love your CPA, that's great. But I just want to kind of note this because it was just something where, like I was saying, I could go one direction and say, did I never know about this and not ask my CPA, or was my CPA not advising me properly? I don't know. So without getting lost in the weeds, I just thought, there's times in life when someone's got you as far as they can get you. Right. And I even think that's with any profession, I mean, there's some real, I don't do all real estate. I don't do, commercial, and I don't do a lot of land. It's like, I have a very special zone that I'm in now. When someone comes to me and says, hey, Chris, I need help with that, I refer them out to somebody. So like, this was just the season of my life after being with the CPA. I was with the CPA. I've been selling real estate for 17 years. And I started when I was 22, but she started doing my books, I think, when I was like 14, because I had another company in high school. So like, this is just somebody who has been with me through.
Sure.
Like, it was like my person who advised me on finances from like 14 years old. So, but I just realized like quickly, I was like, okay, like this is where there's levels to this game, and someone who does a CPA for this level of a business and personal life, like might not do CPA for this person. And, I found that in a few other avenues of my life. And I don't want this to be about me. I'm just kind of giving my journey, but even like my, insurance company, there was a time when I called my insurance agent. She's like, hey, Chris, I can't recommend anything else to you now, because like with where you're at, like you're someone who's like, I don't have a lot of people doing what you're doing in your life. And that was the day where I realized it was kind of a compliment. In one way, I took that as a compliment, but then I was like, hey, I need to go to another insurance person who, like, I'm the lowest person that they work for, that like I need to be around an insurance agent that has somebody who owns like a lot of assets, because I feel like they can advise me and not learn off of me. And I wanted them to advise me and not learn from me. And so that's what I want to note is like, when you reach out to your CPA, if they say they don't understand it and you get Chris, in contact with them, just note that just because they say that they don't do it doesn't mean that that's always got to be the person that you use forever. This was probably that time to stop and note that I'm no CPA and I'm definitely no lawyer or anything like that. So you always want to talk to smarter people than me. I'm just giving you like a personal experience of what I went through and how I've had to make some of my decisions as my company grows and as I get the more assets that I acquire.
Right. Well, you know what? And I would talk to any tax professional that has questions, and hey, I will answer as many questions that they have. I'm not a tax professional, so I would say, okay, I've given you everything I can. I'm going to bump you up to our VP of operations, who can answer any question you possibly got. So the only thing I would say is if you own residential rentals or commercial property and they haven't brought this to your attention, and you do bring it to their attention and they're not willing to talk to anybody, or they're not willing to learn more about it, that's a red flag. So,
Okay.
and you know what, at the end of the day, this is money. This is money. This is your future. What you're doing is trying to make a better life for yourself, your family, future wealth, that type of thing. And you have to be surrounded with the people that know the most so you can understand what they're doing, and they're going to guide you in other directions.
So when someone calls you, let's go through that. So let's someone calls you and you do kind of an initial, because I remember you going through this with you and on a lot, and it was a lot to take in. But if someone just had like one or two, it's they call in and talk to you, and then don't you do like an initial report, like a free report?
Yeah, we do a free estimate, because you
Okay.
can't make any kind of decision without the proper education. So with a very, very small amount of pieces of information about the property. So if Chris calls me up and said, hey, John Smith told me to call you, I own a property, what's this cost segregation deal? That's the number one question I get, is what is this cost segregation deal?
Mm-hmm.
And I say, well, here's what we can do. Here's the basics of what it is. It's just accelerating the depreciation, so you don't wait all 27 and a half years to get all that depreciation. We'll put together a free estimate. The estimate's going to detail exactly how much money you're going to have access to as a tax benefit. And if that's something that makes sense, you want to make forward based on, you want to move forward, we'll help you out. If you don't want to, okay. If you've got 4 properties, we'll put together an estimate on all 4, pick and choose. Do 1, do 4, do none. It's up to you. This is your money, but I want you to at least know how much money can be out there in a conservative standpoint. And then if you want to move forward and study, then we do. But I always tell this when I meet anybody for the first time on phone or in person. I say, even if you don't own the property and you're looking to purchase a property, we can do an estimate on the property that isn't even purchased yet based on the 30,000 studies we've already completed. I'd like to repeat that. We've done 30,000 studies. Why is that number important? The next biggest has done about 10,000. So
Okay.
our company is the biggest company in the country, which I'm only saying that out loud to give you the comfort knowing that 30,000 other people have done this. And again, it could be a restaurant. Maybe there's a franchise in the building, but you own the building. It's a warehouse. It's a dental office. It's any kind of building that is not government owned or nonprofit is going to qualify. And also, it doesn't have to be a building. If you run a business and you own the condo suite in the plaza or the building that you're in, you can do a cost segregation on that. You don't even have to own it. If you're a leaseholder, but you put in significant leaseholder improvements, you can do a cost segregation on that. But everything starts with the estimate.
Okay.
You do the estimate, and I fairly explain, here's the cost, here's the benefit, here's your ROI, here's how much money you don't have to pay the IRS. Take the money you're going to pay them and go put that towards another building to make more money.
And so when you, after you do the initial estimate with somebody, then it's pay for it, and then it's go take photos of it, and then the report comes later, and then you take that report and give it to your tax professional.
Yeah, the study itself takes about 6 to 8 weeks, depending on what time of the year. As you would imagine, towards the end of the year, things are bonkers. In the first 4 months, they're even more crazy. So it's a full 8 weeks. But what happened when it's all said and done? We'll say, here's some cost summary reports. Does everything look good? We're good. Then we release the full electronic study that your tax professional will file with the IRS to let them know this is what you're doing. So when you don't pay all the money you owe, oh, that's the one thing I want to touch on too, Chris. Let's use a random example of a property that somebody owns, and let's say it generates a $50,000 tax benefit. Well, let's say that person only owes $30,000 in taxes. Well, first bit of good news is you don't have to pay taxes, because 30 of that 50,000 is going to be used. The other 20, you could roll over till next year. So it's not something you have to use all of it right now or lose it. you can roll it over, and how that tax benefit is applied is between you and your tax professional. Here's the money. Here's what you can do with it. How do you want to apply it to your internal business? And that's none of my business. I'm just here to say, here's what we can generate for you. So,
and so do you have to be in real estate, be a realtor in order to do this?
that is one of the best questions you could have possibly asked me. Thank you. So to qualify for a cost segregation study on a property that you own, you have to be considered what is considered a real estate professional. That's option one, meaning you're a real estate agent. That means the majority of your income is coming off real estate, right? Or if you put in 750 hours a year towards your property business, then you can qualify for it. The only other way to qualify for a cost segregation study is if, let's say, you own a deli and the building that you run your business out of, you happen to own. But if you just rent the space, you can't do it on the building. If you own a deli or you're an engineer, but you own 4 residential rentals, you can't do it because the majority of your income comes off your deli business or your engineering business.
Okay.
So if you're a real estate agent, it's gold. You and or your spouse are a real estate agent, you can do a cost seg study.
So let me ask you this, because I'm still unclear on this, and so this will actually help me out. So when you get these reports and it says, it's going to save you $40,000, let's say the report says it's 40,000, right? Sure. Is that a straight, like if your tax bill at the end of the year is $40,000, is it straight 40 for 40, or is it bringing your income down another level where you're just in a different tax bracket per se? I don't even know if I said that right, but hopefully you understood.
You did. All I can tell you is how everything gets applied is between you and your tax professional.
Got it.
Maybe get 40,000, but for whatever reason, how you have your business laid out and maybe the income tax bracket and put you in, maybe you only want to use 20,000 of that 40,000.
Okay.
So I'm going to give you a really horrible example, but it's the only one I can think of. If I sell you a car, whatever you do with that car is whatever you do. Put it in the garage, run it like crazy, be a Lyft driver, use it for deliveries, use it for business. Whatever you do with that thing is up to you. I can just say, here's the dollar amount, and that's where my part of the equation is completed.
Perfect. I think that's actually important that you said that, because it just shows you in this process, there's really, a few people that play a part in this role. There's person who buys rental properties, right? That's your part. And then there, I should say like my part or the listener's part. Then there's your part. You do the report. The report then goes to your tax advisor, and they look at it to see what can you do, because you don't know, their personal situation.
Right.
And then there's also the IRS that has some rules. So it's like kind of a combination of things, and you've got to have a few different people doing their part. And it's not like it's not like everybody goes this way or everybody goes that way. It's just your part. Right. And this is to do a report, and there's other people involved in this that says this is what you should do or shouldn't do. And that's, off your shoulders at that point.
Yeah. It's just, and you're right. We've done that. You take it, and whatever you do with it, you do with it. Whatever you invest that money in that you didn't have to, maybe you're looking to buy a boat. Okay, buy a boat. If you want to take, I would say, well, don't buy, boats are nice, but boat's not going to get you any more money. So take that money and use it as a down payment on other thing. So 2 things I want to go ahead. I got a couple things I want to talk about, but you're probably going to ask me a question for them. So let it
yes, I want to kind of talk about, just because we're talking about, there's other parties to this. There's the person who's buying the property, and then there's you, the cost segregation company. Then there's the, the CPA or the tax advisor. And then there's the IRS. So let me ask you this, because I get this all the time when I talk to people about it, and they'll use, and I don't even like this word, so that's why I want to bring it up, but they'll be like, oh, is that a loophole? And what I found anymore is, like, loophole to me now is defined, because I've heard it said to me so many times that I've now realized I've created a different definition for it. It's something that isn't being used by the masses, either because they don't know about it, don't have somebody that knows about it, or it just doesn't fit them, right? So that's like really like when someone says like, oh, you're using a loophole. And I'm like, well, no, there's a lot of other rules in, the tax code, I would think, that like have no benefit to me. Therefore, no one's ever brought it up to me. So like, I wouldn't say like, oh, that guy who's in that specific industry doing that, it's not a loophole. It's just something in the, something in the code that doesn't pertain to me. Doesn't mean there's anything wrong with it. It's just, it's not in my alley of what I need to focus on. So, but I hear that a lot, like, oh, like, is that a loophole? And I'm like, they use it kind of in a way where like you're skirting around something. I'm like, no, there's rules, And as long as someone's following the rules, then that's just the rules. Whether you knew the rules or not is up to you or your professional. And if it's something new to you now, it doesn't mean it's a loophole. It just means it's a rule that you now know about.
Well,
But
that's just it.
you get that word a lot when people are like, "Oh, is that a loophole?"
I get that. And I get some people going, is this thing legal? So the best way to defend that is say, if you want to lose a few hours of your life, please go to irs.gov, type in cost segregation. You can go to our website where you're going to get a nice little 2-minute video, but hey, if you've never heard of something and somebody approaches you with, not only is this thing great, it gets you to reduce your taxes. When it comes to money in the IRS, people are terrified. There's a reason that you have a tax professional, right? You're letting your money being handled by a professional with a higher education on your options. This is not a loophole. It's just part of the tax code. The IRS says, in fact, as a quick little side note, our company started, the gentleman who owns our company, Jim Shreve, he was the engineer that was hired by the legal counsel of the Hospital Corporation of America that sued the IRS. Because, so for residential rentals, you get your tax depreciation benefits over 27 and a half years. If it's a commercial building, it's 39 years, right? They're saying, wait a minute, what if we move into a building and then we sell it in 20 years? We're not going to get the remaining 19 years of depreciation. That's kind of where this all thing started. So Jim looked at this as part of it, defended it, they won, they beat the IRS, and that's when things started to happen for not just massive companies. Then it got to be broken down to smaller people investing $200,000-$300,000 in property, $150,000. So it opened up the playing field, and we're the biggest cost segregation company in the entire country, which just means, again, we've done more of them. We've only done 30,000 total.
Yeah.
How many buildings, for every listener on this podcast, I challenge you to Google how many restaurants are in and then put in your state. There's 200,000 restaurants just in Wisconsin. Well, I'm willing to bet you half of them are owned. So that's 100,000. We've only done 30,000 studies total, which just goes to show how many people don't know about this. They just don't.
Yeah, and it's really one of those things. And as I say this very lightly. So the listeners and everybody, please note, like, this is said very lightly. But you know, when you hear that statement, like the rich get richer and the poor get poorer, this is kind of, this is really, and like I said, I say that very lightly. But when this happened, like, I'm talking to myself, like when this happened, I was like, whoa, like that statement came into my head really quick. I'm like, the rich get richer, the poor get poorer. But then I realized I took it even deeper, because it's like, okay, well, this isn't a lot of it's not by chance. So I was like, all right, well, let's take this further. Like the rich get richer, the poor get poor. And I was like, it really is like the decisions that one makes. And so I was like, okay, so if you keep going out and seeking knowledge and you get to a certain level, and there's levels that you get to and you think like, oh, I can stop here. But that same person, when they keep seeking more and more knowledge, they just keep getting more and more things that other people are doing. And it's like, you know, a lot of people that you go hang out with, let's say someone listening right now has 3 rental properties. If you have 3 rental properties, you have like more real estate, that you own more real estate than almost every one of your people in your network. So like, how would you be hearing about this unless you were sitting in a group every once in a while of people that owned 3 or more rental properties? So I think that's kind of like what I really learned when it was, like I said, it was the very first monetary thing that I could say, like, save me a lot of money at a high level that I could put on a mastermind. And that was when I was like, okay, this is where, if you just keep going to things and learning stuff, because I already know in 6 years, there'll be something that someone's talking about today that like, I'm just not actually prepared for right now, because I'm not there. It actually has no benefit to me because I'm not feeling that pain. But I know something, I know they're talking about it. I can't feel it. So, but it's like, that's not what I'm saying though. It's like in 6 years when I'm having that pain point, and then I hear it, it's like, oh, I have the pain, you have the benefit. Let's figure this out. And so that was really the first time when I said like the rich get richer. It was like, it's these kind of things. It's you hear about something from somewhere and then you go execute, because I've been in some masterminds that you've spoke about, and it's very interesting. Like the question, the hands go up. And have you ever noticed this, Chris? I'm sure you have, but you get those people that are somewhat like challenging you, like more skeptical.
Sure.
And then you get like me, who just, like hears it, and I'm like, oh, I'm gonna take that guy's number down, and when I leave, like he's gonna be the first person I text when I walk out of here, and just line up a time, text you, called you, learned more. You told me here's the, reports. This is what it could save you. I handed that over to my, my tax attorney. He's like, yep, that makes sense. And then we paid for him. We proceeded. We're done. But you still have that same person who probably in that room who owns 3, 4, or 5 that raised their hand, and they're kind of like, I don't know, like I've never heard of this. Is it legal? Is it a loophole? Like it's interesting how there's those people that go that direction their whole life. And then there's other people that are just like, hey, like I'm gonna go learn more about this. Are there other people doing it? And so as I say that, like asking, is it legal or not? Like I'm saying, like you should do that in everything in your life. But it's like, I don't know why they stop at any time it says save money on your taxes. It's got to go in this category of cannot be researched and never talked about again.
Yeah, I look at it kind of in the way of if you've got $100,000 that you just were given today and you can do anything you want with it. The basic says, well, I could sure put it in the bank and get myself 0.0008 interest. Wait a minute, and there's probably other ways to know what I could do with this money. So what do? You talk to a financial advisor. You talk to your own tax professional. You talk to someone at the bank. Find out different ways. If you're not doing that, you're only holding yourself back. So the person who seeks the knowledge to have the most power only matters if all the time they spent on it, they then do something with it. And there's a reason. So here's what's kind of crazy. The mastermind that I was asked to speak at, the 2 gentlemen who run that mastermind were referred to me from the same tax attorney that you now use.
Okay.
So they referred those 2 guys to me. And they said, well, what is this thing? We don't totally understand, but we understand we have to pay less taxes. What is it? When I kind of explained it to them, they go, well, okay, that makes sense. And then they referred me to other people, and those 2 people were, and so the calls I get on a weekly basis are all from other people who now have referred me to other, because it's firsthand knowledge of it. Like this particular podcast, hope you reach as many people as possible, because you want to see I've sometimes compared buying properties to getting tattoos. Once you get one, you kind of want another one, and then they're like, well, wait a minute, how many can I get? And I think they said in the last mastermind where I saw out in Arizona, they said 30% of all properties being purchased, residential properties being purchased today, are being purchased by investors. Mm-hmm. That's a massive, massive statement. So if you're going to build your portfolio in your current financial structure, maybe you can only do that 2 houses a year. Well, if you do a cost segregation study on the buildings that you own, that's now open. Now you can do probably maybe 4 a year. And every time you buy a new property, you can do a cost segregation study on it. It doesn't matter if the building was built 100 years ago and has changed hands. The minute it changes new hands, sold to a new person, it gets put into service, that's when you do it. And it could be up to we say this, we'll provide an estimate for anything that's been built, purchased, or renovated in the last 20 years. I always say this, let's do the estimate, because you don't know what kind of decision you can make until you know the money that you're going to get out of it. I've had people reach out to me, hey, I want 8 properties, and then they say, well, we're going to sell a couple. So I do want to kind of touch on that real quickly, if that's okay.
Okay.
People say, when doesn't it make sense? Because everything can't be all great, all butterflies and ponies forever.
Right.
The two times it doesn't make sense to do a cost segregation study on a property that you purchased. One is if you don't have a tax liability. People have called me up and go, I've heard about this cost segregation thing. I bought this $600,000 property. What should I be estimating for a tax benefit? I tell them, 600 grand, probably $35,000, $40,000. They said, great. And what do I do with this? I said, you apply it to your tax liability. And they go, oh, I don't know any money. I go, well, let's talk next year when you do, because you obviously had an off year, which a lot of people did during COVID. Not everybody did. So that's the first reason. Second reason is the corporate line is, if you plan on flipping the property within the next 2 years, don't do a study.
Okay. But
here's how I look at it. Many people buy many properties with the idea of, I'm going to have this property for 20 years. You buy a property for 300 grand within a year, somebody comes along and offers you $800,000. You're going to question your thought of, should I hold on to this property or should I sell this property? $300,000 purchase, $800,000. That's a pretty good gain. I'm going to sell this property. Well, I say this, you never know if you're going to sell a property, regardless of what your initial thought was. So what happens if you sold a property in 2 years and we were going to get that $40,000 tax benefit? Do you have to give it all back? No, because you would have been taking depreciation those 2 years that you owned it anyways. You would just have to pay back a partial. Is that the end of the world? No. You just got an interest-free loan from the IRS for 2 years.
Okay.
That's how you look at it. Anytime you can take something, why do you buy property in the first place? Because the rule of thumb in this world is property always rebounds, increases in value, that type of thing. Well, let's do that with your money. Let's make that money work for you. A dollar saved today is no longer 28 cents in 39 years. It's right around 18 cents. Here's, and they do the lottery example. They do that. That's the greatest example out there.
Yeah.
Hey, if you win the lottery today, do you want 125 million over 30 years? Or do you want 100 million today? You want 100 million today, so you can take that money, invest it in something. So over the next 30 years, you make 300 million. It's all about the time value of money.
And do you find that a lot of people ask you for a report on something that they're possibly buying?
Sometimes it happens more probably from commercial real estate agents where they'll have a bunch of buildings, and one of the things that's out there, and I don't know if this is the time you want to talk about bonus depreciation, or you want to leave that a little bit later.
No, you're fine. You can talk about it.
All right, cool. Yeah. So something happened in the tax code back on September 27th, 2017, and it's called the Tax Cut and Jobs Act. And what it did, it helped property owners and people who build property, purchase property. It helped them in a massively significant way. What happened was anybody who purchased property after September 27th, 2017 is going to get 100% bonus depreciation. What does that mean? Let's say, I'm going to keep things very simple from a mathematics standpoint. Let's say you own a property, and for whatever reason, there's an IRS number of $27,000 that you'll have as a tax benefit for your windows, let's say. Okay. So for the next 27 years, you get $1,000 off your taxes. That's how if you don't do a cost segregation study, that's what you're doing right now. It's called the straight line approach.
Okay.
So, okay, $27,000, I get $1,000 off my taxes every year. Hey, let's do a cost segregation study. I get $27,000 off today. Obviously much better, right?
Right.
Well, here, the 100% bonus depreciation now says those windows are worth $54,000. Well, things changed pretty quickly because it's not just the windows, it's the carpet, the crown molding, the windows, the wiring, the ducts, the HVAC, the fans, the toilets, the sinks, anything and everything inside that property in the 20-year category or less went to 100% bonus depreciation. So I remember very specifically, a commercial real estate agent reached out to me in Tempe and said, we got a buying group, 4 people are looking at this property. Run a study. And I did. It was like $140,000 in tax benefit. Now, since they're splitting it 4 ways and they were going to buy it, it didn't really move the needle because you're taking it one word and splitting it. Well, literally within 3 or 4 weeks, that tax law changed. We redid it, and now they're up to $280,000. Well, now that interested them enough, they bought the property because they got to split that 4 ways. So the 100% bonus depreciation is not going to last forever. It does. It's like I said, it's been going on since September 27, 2017. At the end of the year, starting January 1st of 2023, the 100% bonus depreciation goes to 80%. Still fantastic, not 100. And then in 2024, it goes down to 60% and so on and so forth.
Okay.
Now, depending on who's in the White House, they may change it to extend it. I would hope. We're all hoping, and it would make common sense. Now we're asking the government to make common sense, but the common sense thing would be extend this because it's allowing more people in the United States to purchase and build more property. When you purchase and build more property, you're giving more options to residents. You're also giving more options in creating more jobs.
Right.
So the more people that are in the United States can do that, more buildings are being, we had done 12,000 studies up till 2017. Now we've been in business for 20 years. Up until 2017, we had done 12,000. Now we're at 30,000. That's a massive change. So get it while the getting's good. The more money you can get as a benefit, the better. More money gives you more options in life. And I don't care what you're doing for a job. More money equals options.
And that's where I feel like I did mine all on, like, I call it the defense. Like, I came to you and already had acquired properties, right? So
Yep.
I was coming to you because I had learned about it and I did it right. Well, now,
Yep.
like, I'm meeting up with my tax guy. I think in 2 weeks I'm meeting up with him at his office. And, like, we're gonna kind of start talking about how to be on the offense of this. So, like, I feel like there's defense, offense, and offense
Yep.
now is like me meeting up with him every like 45, 60 days. And we're sitting there, we're looking at my profit and loss. And we're saying, like, hey, this is how much, this is going to be your tax liability. And now it's like, now I'm going, now it's going into the world of, getting every 60 days, like, what's the profits and what are the smartest ways moving forward on things we could do, and so that's where it might be like, he might be now suggesting, like, hey, Chris, you probably do want to go buy a property. And so I'm like, okay. And I think that's kind of that's probably the most challenging part in like, for example, Arizona, where I sell real estate. That was the most challenging part because, like, the investors, I feel like they have more options, therefore they could pay more for properties. So it was like anybody who was doing 1031 exchanges, they could pay more because they were looking at it differently than that other person buying it as a primary, because they were looking at, like, I've got to pay this much in taxes so I can actually overpay here and still make, money on my end.
Right.
I think that was also what was happening with a lot of the hedge funds that were buying properties in Arizona, is they're looking at them like 40 and 50-year plays. So they were just being able to buy houses for 40 and 50,000 over, just saying, hey, we're betting on the future far down the road. Well, that primary homeowner who was trying to buy that $350,000 house, they can't overpay $40 and $50,000 for something on a 40 and 50-year, future decision. They've got to pay now based on what they have in the bank. So, like, I feel like that's why, like, especially here in Arizona, because I feel it because I'm here, is the investors typically have more options to make decisions. For example, like this point specifically, is if, like, my CPA says, hey, go out and buy a property, then you're looking at that more from, like, I'm just doing this decision to save here, and you can make different decisions than the other buyer who's trying to buy that for their family home. So that's kind of the level I'm going to now, and I'm really looking forward to that and doing that all with you. Is there a level to how many you can cost segregate, or is that no capping point?
No capping point, no ceiling. Also, I want to mention this can be done on standard long term, but I do have a lot of investors that are taking their long term and they're switching some or half or all over to short term. They're doing Airbnbs. You can do this on an Airbnb. You can, now that's where it is interesting. If your property is being run as a long-term rental, there's 27 and a half year straight line approach. The minute you turn it into a short-term rental, boom, that goes up to 39 years. Okay. So costing becomes even more important to do and take care of. But yeah, a lot of companies, a lot of investors are doing that. More work, but you make more money doing an Airbnb, and whatever works for you, and switch it to whatever you want. But if you can find a way to reduce your tax liability and spend that money on something else that's going to get you to gain, why not? And you mentioned 1031 exchanges. You can do cost segregation studies on 1031 exchanges. So there's a lot of things that can, and again, for those out there that are wondering why their CPA didn't tell about this, give me a call. We'll get on a 3-way call. I'll get you on a call with the VP. We're going to be able to explain the things that may have really clogged up the misinformation trail. Okay.
How do people get in contact with you, Chris?
First thing I would suggest is go to our site, and it's probably the best way, because when you go onto it, my contact information is on there. There's going to be a quick 2-minute video that just encapsulates a very simple way to understand cost segregation. Now, the people out there listening to this who already own property already understand the concept of the depreciation tax benefits. So for people out there who've never purchased property before, this is something new. It's all new to you, right? But I would go to CML, Charlie, Mary, Larry, .csssistudy.com. I'll repeat that. cml.csssistudy.com. And there's the video on there, and there's a way to say, hey, do you want more information? Fill this information out. It'll go directly to me. I can answer your question, or you can give me a call at 262-358-5156. Again, that's 262-358-5156. It doesn't matter if your property is in Florida, Maryland, Washington, California, Doesn't matter. I had a taxpayer who, taxpayer here in the States who had a property in Tahiti. Yep, we did it.
Okay.
So
Well-
it's overwhelmingly easy.
Well, here's what we did, Chris, is we either made the listener listening right now super excited or we bored them. And how I say that jokingly because I think it's funny because like it's somebody either probably owns properties right now and you think like we totally sparked them like when I was in that mastermind, like we literally just sparked their interest and thought, whoa, this could be a game changer like it did for me. Or you own no properties right now and you were like, that was a lot of tax stuff that makes no sense to me. I hope that person that's heard this and has no properties. My goal of this podcast is, like I said, I talk to a lot of realtors about how to sell a ton of real estate, make a lot of money. And I try to teach them, hey, take your profits, go buy investment properties so that you actually can start getting money from other things outside of your business. So that realtor right now that's listening to this and you actually got to the very end and own no properties, the goal is that you can see where when you do finally get that down payment to buy an investment property, that these are some of the other things that you could be doing to save. So like I said, we either totally made you excited or we bored you if you got this far and you don't own properties. And I'm thankful that I met you at that mastermind and thankful that, you came. I'm thankful to myself that I went and listened and that we got these done. And I really look forward to, doing more business with you in the future and just referring you out to whoever I know that might need your services.
But I'm just glad you had an open mind because, as we know, not everybody we talk to has an open mind because whatever they got going internally may not be ready to handle what they're hearing. But if you hear things enough, that's why Coca-Cola still advertises during the Super Bowl. Everybody knows what a Coke is, but they still say, well, let's give them more commercials. They want to know out there. Long story short is this: a cost-sake study will create a tax benefit that'll help you reduce your tax liability. If you prefer to pay the IRS less based on their rules, go to the website, give me a call. Love to talk to you about it.
Easy enough, man. Hey, I appreciate the conversation and yeah, we'll be talking soon.
Thanks so much, Chris. Appreciate you having me.
Hey, later, Chris.
All right.
Bye.
Take care.